Life continues to worsen for most people as inflation drives food prices up. It is currently at 10.9%. This is the largest increase since May of 1979. Annual inflation rate is at 8.5% after it peaked at a historic 40-year high of 9.9% in June. This has ushered in a severe economic crisis, unlike any that has ever been experienced in recent years. Most experts, including the Canadian venture capitalist Chamath Palihapitiya, think this is going to be the beginning of what will be a horrible economic crisis where everything will collapse. Is there anything that can be done to prevent or at least slow the economic collapse down? If the collapse were to happen soon, is there anything you as an individual can do to protect yourself from it? Let's learn all about it. But first, make sure to subscribe to Market Magnets and click the notification bell to not miss any of our following videos. With energy inflation at a ridiculous 32.9% year on year, it doesn't seem like this level of pain is off our backs anytime soon. This comes after hitting a 42-year high of 41.6% in June. Since oil is so vital to the economy, one can only imagine how much productivity will be lost in the course of time from now through 2024. Compared to last year's prices, fuel oil prices have increased by 75.6% and natural gas at 30.5%. Naturally, this has driven electricity prices up by 15.2% year on year, the most since February 2006. Venture capitalist and social capital owner Chamath Palihapitiya say that the world is experiencing a supply-side recession, which is the first part of the process. Before we delve in, let's take a step back to understand Chamath's story and why he is such an important figure among investors. Chamath Palihapitiya is a highly successful entrepreneur and venture capitalist in the San Francisco Bay Area. He received his bachelor's degree in electrical engineering from the University of Waterloo. He first entered the venture capital world in 2006 as a principal at Mayfield Fund. Before that, he worked at AOL and was head of the instant messaging division. In 2011, Chamath founded Social Capital to invest in companies in fields being ignored by other venture capitalists, like health, financial services, and education. He remains the CEO of the company. However, the firm has since expanded to invest in tech companies like Amazon, Tesla, and Slack. But according to its website, the company is currently not taking new clients. Before founding Social Capital, Chamath served as Facebook's vice president of operations in several capacities, including as a lead developer. He is credited with helping orchestrate the massive growth of the social media platform. He's a proponent of special purpose acquisition companies, or SPACs. These are a kind of investment vehicle that allows private companies to go public with less scrutiny from the Securities and Exchange Commission, the SEC. Chamath is a sponsor and investor in half a dozen SPACs. Companies they have merged with include Virgin Galactic and Clover Health. He is also founder of Social Capital, a venture capital firm that he started in 2011. After a wave of defections in 2018, Social Capital became mainly a permanent capital model and launched two SPAC platforms, Social Capital Hedosophia and Social Capital Suvretta. According to the Social Capital website, these platforms were created to provide an alternative growth path for companies to go public, while continuing to make public and private investments. The focus spans climate science, life sciences, crypto, and decentralized finance, plus deep tech. In 2019, he sponsored a company that merged with Virgin Galactic. He later sold a large part of his stake for $200 million in March of 2021. He continues to sponsor the initial public offerings of many of the SPACs. As of the end of the last fiscal year, he was worth $1.2 billion. But due to the current economic crisis, Chamath has dropped off the billionaires list, according to Forbes. He is known for his media appearances and his active Twitter account, with over 1 million followers. But in a recent interview, Chamath warns that the global economy seems to be on track to the phases of recession. He says, "We have been in a supply-side recession. This is what has caused inflation. We have to go through a process of taking all the excess money that's been put in. And when you do that, we will destroy demand. trigger a demand-side recession, and destroy asset values. When Chamath is talking about supply-side recession, we need to take a look at a number of European countries such as Greece, Portugal, Spain, and Italy. A significant reason for low economic growth in these countries is the fact that they have become relatively uncompetitive. This is due to supply-side factors such as rising wages, poor levels of investment in infrastructure, and therefore low productivity growth. These supply-side factors become very important because countries in the euro cannot devalue to restore competitiveness. Since they become uncompetitive, it results in a decline in exports and a rise in imports. This leads to a fall in domestic demand, leading to lower economic growth and can cause a recession. To what extent can supply-side policies help an economy recover from a recession? In the case of Spain, Greece, and Italy, supply-side policies which help to restore competitiveness could play an important role in helping the economy to recover. For example, supply-side policies could help improve labor productivity and reduce costs. These policies include lowering tax rates on labor, reducing labor market regulation, and reducing the power of trade unions. This should lead to an increase in export demand and help domestic demand. Chamath adds, "I think we're still firmly in the first phase, and I hate to be the bearer of bad news, but the reason why I still think we're in the first part of this process is that people, broadly speaking, still have a lot of savings because of all the stimulus checks. So there is still a lot of money." On March 11, 2021, President Biden signed into law a third stimulus package called the American Rescue Plan, with a total budget of $1.9 trillion. This package included payments to households that did not receive any payments on the first two rounds of cash payout. The stimulus package provided check payments of up to $1,400 to eligible individual taxpayers and a maximum of $2,800 to couples who filed their taxes together. In addition, families with dependents, regardless of their age, were eligible for an extra payment of $1,400 per dependent, with no limit to the number of dependents that they could claim. As U.S. prices continue to rise at rates not seen in decades, it's become obvious that the stimulus came at a significant, unintended cost: inflation. It's unclear whether inflation has reached its peak, but the situation is now economically and politically toxic, and it has left many of the same policymakers, advocates, and economists now asking whether the stimulus checks were a mistake. Were they? These are symptoms from which Chamath Palihapitiya has already made his diagnosis, and it is evident that the economy of the United States is heading for more pain. With the U.S. debt profile at $30.9 trillion, it translates to $92,761 of debt per American. Once more people know this, soon they will be able to tell that the future is far from being very bright. Even more so, on the 26th of July, a 30-second video from a news media outlet quoted Senator Yellen saying 2 negative quarters of GDP growth is not the technical definition of a recession traditionally held by economists. The next day, Chamath Palihapitiya quoted this video on Twitter saying, "The recession disinformation campaign is pointless." He listed out a number of reasons for that, some of which are: 1. Assumes people are either dumb or never believed the definition in the first place. 2. Won't change what actually happens to the economy or people. So, what is a recession? According to the Oxford Dictionary, it is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. We can also call it a business cycle contraction when there is a general decline in economic activity. Whenever there is a widespread drop in spending, it almost always results in a recession. In the meantime, the CEO advises investors to hedge against inflation with these 3 types of assets. The social capital founder mentions the 3. They are hyper-growth companies, cash-generating businesses, and a handful of non-correlating assets like cryptocurrency. This is what Chamath said to CNBC at the Delivering Alpha conference in September 2021. "I'm very concerned about medium-term inflation. In an inflationary environment, in my very simplistic view of the world, I want to own 3 things: Hypergrowth, because hypergrowth can always outrun inflation. Cash-generative assets. And then, I want to own non-correlated assets. Chamath defines hypergrowth companies as businesses that are growing at a rate of 50% or more each year. The investor mentioned Clover Health, Open Door Technologies, and Sophie, all of which he helped take public through special purpose acquisition companies. In terms of stocks that are generating cash, Chamath said mining stocks are a good option. He says, when we are back to normal, if we go through an inflationary period, you'll want the thing as it was growing a lot, not the thing that was growing a little bit. And you'll want the thing that was generating a ton of cash because in a rising rate environment that has very positive attributes that work in your favor. The third type of investment Chamath recommends for hedging inflation is a non-correlated asset. These involve cryptocurrencies like Bitcoin or Solana. Solana is a 2.5-year-old blockchain network, quite new. According to CoinGecko, it is currently the 9th largest cryptocurrency by market cap, valued at $12.8 billion worth of investments. The hyper-successful investor adds that these are a great counterintuitive hedge against the other two investments. Chamath is hyper-bullish on Bitcoin and has even said that the flagship cryptocurrency has effectively replaced gold, and it will continue to do so. He added, I do worry that we've pumped an enormous amount of money in the ecosystem and it has to show itself. When we start to balkanize the supply chains and regionalize, because of China, prices are going to go up. The CEO told CNBC earlier in 2021 that Bitcoin could reach $200,000 one day. It might sound far-fetched now as the digital currency currently wavers around $20,000. Although the former Facebook executive admitted, I don't know where it goes. I'm a huge intellectual bull. It could get very big. We all need to pay attention to it. On the potential for regulation from the Securities and Exchange Commission, Chamath said cryptocurrency is just an iteration of the internet and will be difficult to legislate. I think it's very hard to kill. It's completely headless. It's entirely peer-to-peer. I think that's both scary and exhilarating. Which of the hedges do you plan to own?